Hello, and thank you for making the time to join us today. We continue with our discussion on calculating income tax liability. Today, I want us to look at the pro forma for calculating income tax liability. As stated in our earlier video, we have three categories of income. That is non-savings income, example is wages and salaries. Savings income, example is interest and dividend income. The first step for calculating individual's tax liability for the tax year, let's take say tax year 2020-21, is to arrive at the taxable income for the year. We then apply the tax year's rate to give us a tax liability for the year. The pro forma for calculating individual's tax liability is very important. The income tax pro forma differentiates between three different types of income. And normally, we use software to do the tax return. So you don't see what goes on behind the software. But this is how it's calculated. They have to categorize it into the three main categories. And the first category that is considered is the non-savings income. So let's say your income, your employment income, your self-employment income, your rental income. That is considered first. Then the second bit is the bank or building society interest before we go on to the dividend tax. Once again, I'm going to share my screen so that we'll be going to an example for you to have an idea of how your tax return is done and your tax is calculated, how you arrive at your taxable income and then your tax liability for the tax year. So bear with me as I share my screen with you. As stated, we are looking at a pro forma for income tax calculation. That's what we are looking at the moment. Okay, so on the screen, I put a sample of a pro forma there. We're going to go through together. So when you look on the screen, you see that the first tab will be non-savings income. That is what we consider first. And then the second category is interest income, and then we go on to the dividend income. You see that, for instance, in terms of the earnings, we have trading, traded income, property income, interest, dividends, foreign income, and total income. It's not showing very well on the screen, but what I'm trying to explain is that behind the software, what is happening is they have the non-savings income. That will be the first category to look at. So they will consider all your income, like your trading income, your property income, your dividends, your interest. Then after the non-savings, your interest income will come. That will be the next to be taxed. And on our next video, we'll look at how the pro forma for interest income, because there are it's got a different approach in terms of calculating the tax on your interest income. And then there is a different legislation for calculating your tax on the dividend income. So all of them have got different legislation, and we'll go through it. When you look in the pro forma, you can see that the foreign income, for instance, could be non-savings income. For example, maybe it arose from rents in, let's say you have a villa in France. So even though it's a foreign income, we'll put it on a non-savings income because it will be your rental income. And it could also be savings income because it could also be interest income from, let's say, a bank, your bank interest from, let's say, a bank account in France. So when that happens, we put it under savings income. And then the other category is dividend. This could be dividend income you receive from shares in, let's say, an American company. And like I said, we don't mix them because all of them have got different legislation. So we'll go through step by step, but we are considering the non-savings income at the moment. And I'm hoping that our next video will be on the savings income, and then the next one will be on dividend income. Uh, Mostly when you go to your accountant, they will just put it in the software and you calculate it. But the whole idea of this video is to give you an awareness of what happened behind the software and how your tax is calculated. Let's just get and like I said, income from all sources is added together to give total income. So for the non-savings, you add all the income for the sources together to give you the total income. And then after we've done that, you can see that in the pro forma we have deductible payments. So certain expenses incurred by individuals can be deducted in order to arrive at taxable income. So after we've got the total income, we deduct the expenses. But we do it in priority to the non-savings income. So that will take the expense first. And if any of them is left, we carry it to the deducted from the interest income and then to the dividend in that priority. Yeah. So deductible payments are deducted from non-savings income first. If there is not enough non-savings income, then such payment can be deducted from interest and then from dividend as appropriately. I am going to share. Let's see what we have on the screen, and I'll be sharing an example with you very soon. So let's see. Okay, so when you look on the screen, when we arrive at the net income, that is after we've taken the deductible income, the next stage is to take away your personal allowance, because we are looking at individual tax, which is separate for corporation tax. So that's what we are looking at, income tax. So the personal allowance for 2020-21 is 12,500. And we will normally take out the personal allowance first from your non-savings income. And then if there's any remaining, it goes to the savings income and then to the dividend income. Yeah, that is how the software will work it out. But it will be nice for you to know so that when you take your record to your accountant, they give you, at least you have an idea of how they arrive at the figure. And we are always there to welcome you if you want us to help you to calculate your tax return. We take our time to explain to you, to help you to understand what you've done. Let's move on to what's on the screen. Okay. So as with deductible payment, like I've explained already, the personal allowance is deducted from non-savings income in priority to interest and in priority to dividends. Having deducted the personal allowance from net income, this gives us what? Taxable income from all sources. Yeah. We were going to look at an example very soon. But if you look on the screen, I've put the basic tax rate. But before we get on to the basic tax rate, I'm going to stop sharing this one and I'll give you an example. I just want us to go through an example very soon. But let's have a quick look. You can see that there are different tax rates. There are three rates of tax apply in 2020-21. We have the basic rate, which start from £0 to £50,000. And bear in mind, your personal allowance will be taken out. So to give you the taxable amount to be 37,500. So from 50,000 £1 to 150,000 will be taxed at 40%, and any excess above 150,000 will be taxed at 45%. I'm going to stop sharing this one and then share an example with you. So we're going to go through an example very soon. Just bear with me. Let me share, see an example. Okay, let's have a look at what is on the screen. An example, I've taken an example like we have Justina has has the following income and expenditure in the tax year 2019-20. Let's say her salary from the job was 30,000. Then she had benefit of 8,000, and she had rent a flat in Nottingham which had rental income of 7,000. Rent from the flat, she had a foreign income as well. Rent from a flat in France, which is 4,500, and there was a deductible payment. This will give to a total of Justina's taxable income calculated as follows. So you see that the earnings, which is the earnings from the 30,000 from her salary, and then the benefits will give you 38,000. Then we add the property income from the flat in Nottingham, which is 7,000 to it. And then we add the foreign income, which is 4,500 to it. So her total earnings will be 49,500. Then the next stage will be to take out the deductible payment, which is £1,000. When we take it out, we get 48,500. After that, we take out her personal allowance of 12,500, and this will give us taxable income of 36,000. Yeah, so you can see from the screen her taxable income will now be 36,000. Now, after we've arrived at the taxable income, we're going to apply the tax rate. And as I explained earlier, the tax rate, we have the first 50,000 will fall within the basic rate. So that amount will be taxed at 20%. Then above 50,000 up to 150,000 will fall within a higher rate, and that will be taxed at 40%. Then above any amount above 150,000 will be taxed at 45%. So let's now apply this rate to her taxable income. You can see that all her taxable income is below 36,000, and which is far below 50,000. Normally, when we take out the personal allowance, this one we've already taken out her personal allowance. So if her taxable income was above 37,500, then any excess above 37,500 would have been taxed at 40%. But now you can see that everything is below 37,500. So her taxable income will be 36,000 times 20%, which will give us 7,200. Yeah, I'm going to stop sharing the example and go back to the video. Just bear with me. Okay, so yes, we've come to the end of this discussion. Yeah, if you have any questions, by all means get in touch. Our contact details are on the screen, the office line. You can get us on 0115 916 3180, or you can WhatsApp us on 075 68 911 660, or you can email us at info@presontaxaccountant.co.uk, or you just visit our website www.presontaxaccountant.co.uk. We'll be very happy to help you. If you have any questions in tax, you can always inbox us with your questions, and we will make tax block on it, or we will contact you directly and discuss with you. So once again, thank you for watching. Yeah, I'm going to stop sharing my screen now. Thank you very much for your time, and hope you can join us again tomorrow. Thank you.